Hello, Warriors. Dale Pinkard here at TradeGATEHub.com. Our sponsor is TradeView Markets. I want to start off with US dollar yen and keep in mind the BOJ this week. So we want to be flattish into a central bank event, but I just want to recap. Last week, I talked about getting short at 36.80 to 7, and then I was on the, that was Monday. This happened Tuesday. Was on the air with you on Wednesday. Check it out if you think I'm a revisionist, and said I think there could be one more high, one more push, and I'd sell it up there because it would not confirm. It did not confirm. So right now it looks like you have a 1, 2, 3 top to a bottom. So if you shorted it up there 37, you have 150 pips on this trade right now. I always recommend getting at least a piece in the bank. So you may want to take a piece and cover almost all of it before the BOJ. And how I would handle the BOJ, it's Kuroda's last meeting. I'm not sure if he's going to do anything with major impact, but I believe you still have to sell rallies. So if we get another rally, even to new highs, that's a short for me, and closes back under 135. If I'm not short, I would go with, because I think there could be a pretty good break here in yen. Yields put in a pretty negative day on Friday after making new highs. There's a look at your 10-year. Okay, so the correlation between lower yields and a lower yen, I believe, is going to continue. Here we are. We had this false breakout over 4%, and the ISM took it down. So now you have a false breakout. I think we could see 370 in yields here before we make another march to make new highs on the 10-year over 430. The bond chart actually looks very impressive here, and this could end up being a significant low. If you noticed, we barely undercut this low. So the long end of the market held up much better than the short end, and 10-year is not exactly the short end of the market. So here's an ultimate compliment. I would not be short bonds right here. I know that the commitment of traders has a lot of spec shorts, and they're starting to get squeezed. I think we're going to come in another full point higher again today. So as long as this chart looks okay, I'm going to work the short side of the yen, and think that there could be a pretty good break in yen. So I know there's going to be plenty of stops along the way in the yen on any decline, but I can't see, back to this major breakout. Remember, I don't talk one side of the yen. I was turning bullish at 131, talking about 135. Okay, then we had this breakout over 32, which measured 37, right? 127 to this almost 133, which would get you a 138. This is topping, in my view, and yields are the major reason for thinking that we could trade back towards 133 or so in the coming weeks. That would still be, you could still be a bit bullish if we hold down here. I actually think, though, there's a chance that we get a big break and take out these lows in the weeks and months ahead. I know there are a lot of people that would say, well, Dale, you're an interest rate bull. You think yields are going higher. How could the yen continue lower if yields are heading higher? Well, I'm just, I love correlations, but let me teach you something right now. Even though I look for them to shape my narratives and biases, you must trade every chart like it's own individual universe, and trade the price action within that instrument. It has more priority than a relationship it has with another asset class or another currency. So trade the yen like it's a yen. You look for tells from things like yields, but the master of the yen is price action in the yen. So let's talk about the euro. It's really not giving up much ground. It's not really making any major progress as well. Say we got a rally that looked like we could trade, 107.50, 108. On the dollar, we could just as well be peaking out here, and we never got that completion under this 10, what's this level? 540. I thought we'd trade 104.5 or so. You know, you look at what's happening here, even in cable, that I'm trying to trade a range like this. That's all we have is a range. But I do believe that this bottom line down here has destiny to be filled out. So let me go to a 4 again. And that could take the cable down to, let me just, I'll give you a look. So it's going to start coming in under 18.5. It's going to be pretty close to this prior low. I think they may wash that. That would be the grand prize to shake out any cable bulls. And I still think there are plenty of cable bears that eventually could be shaken out. But again, when I talk about a market that isn't giving the bears or shorts much of a payday, is look at the range we've been in. Basically a 400-point range going back to the beginning of December. So we're talking about 4 months of range trading. I think that there's going to be, really think that there's going to be a stop hunt above this double top. I'm just not sure if it happens from here or we have to take out this one 18, I believe this low right here was 1920, 1880, 1840 down here, this low, and get the stops down there and then start turning up. I also want to talk about what I'm looking to do in the gold. So anyway, leaving it with the yen, I'm a seller after the BOJ. Okay, so you know, if the BOJ Kuroda comes up with some kind of magic trick and the yen rallies one more time, I'm a seller. Okay, I would sell it up here even at new highs. It will not confirm. So I would do that, or I would sell maybe a 50% retrace, but again, waiting for after the BOJ. And then just to make sure that I'm there for this move towards 32, 33, I would also sell a negative close under, I believe this was last night's low, 35, 36, so that I'm there for this drawdown back to the breakout at 33. I want to talk a little bit about gold and silver. I believe they both bottomed last week. Okay. So if you missed this move, and I had been talking about 1804, 1803, the low was 1804 last week. Pretty good rally. Look at where it held on the weekly, exactly at the 50-week moving average. You see that? So I'm going to give gold the benefit of the doubt that its bottom was put in last week. You see this double top up here before I move to shorter term stuff. This is a 2060 and 2060. I believe that this level is a magnet and that eventually we're going to break out this year above these highs of 2070. And how I'd play it this week, I'd use two guidelines. First, I'd use fibs. So when you look at this gold rally, it's been $57. So for it to pull back 34, this 1830 level looks like it could be an attractive entry. I'd call it 1830 to 1820, 1835 to 1825, wrong under the 1803 low. And the other thing I would use to time it is the gold silver ratio. And this is going to make silver the preferred long. Should we get one more push up in the gold silver ratio to 89 or 90, which I think is possible, that's going to give you a 3 drive, and I'm looking for this ratio to peak and start heading down. So when we're up here, I'm going to be looking at where silver is at and buying some silver, because I believe silver will then become the preferred long. Just like for all this time, all this time, even to now, gold has been the preferred long, right? That's why you had this kind of move when the XAG is heading up. This is about gold strength, which we had, right? But the silver could not make a new high, right? All through this, gold was making successive new highs. So the gold silver ratio kept you in the right metal. When you wanted to be long precious metals, you were long gold because of how this ratio is playing out. Now that we've had this big move in the gold silver ratio from the 74 range up here around 90, I'm looking for this ratio to flip on some type of 3 drive to a top formation if we get one more shot up towards 90. So use both the gold area around 1830 and one more high in the gold silver ratio up around 89 to 90 to time your long entries into both silver and gold. And that's a wrap. I'm looking forward to working with Mike this week. He'll be with you in a little over an hour and a half. We'll see what happens talking about risk. Mike and I were on the air live right here when we were diverging. We talked about it. Mike was buying J&J, Microsoft. He was getting long. I'm sure he had a real nice finish to the week. Pay attention to what he's looking at going forward for this week. But you have to say, and this area was definitely talked about, the 3,900, 3,920 was a battleground. Bulls won. So, the way this market looks to me is that I think there's potential over the next month, maybe, maybe even into April, for the S&Ps to potentially rally to 43, 4,400. We'll see. We're at an important level right here, but this was an impressive hold. Again, if you're a bear, you need closes under 3,900. That doesn't look likely to me right now. And that's a wrap. Remember, everyone, don't just count your pips, count your blessings. I'll be back with Mike tomorrow and back with you individually on Wednesday. Open a demo at TradeView, and don't just count your pips,